All right. Today is, what is it? Tuesday, May 3rd. And this is a recap for the stock market activities today. Folks, I got a good one for you tonight. But before we start, a few notes, three of them. Number one, here's a comment from the viewer pointing out that we have these bots, these scammers, spammers, whatever they are, with the WhatsApp and the crypto scams in the comments section. Now, I try to do my best in eliminating them, but it is overwhelming because they create multiple accounts and they hit the channel all at once. We complain to YouTube about this, but of course YouTube doesn't give a shit. Even though we follow their insane guidelines, step by step, and God forbid, any little mistake and the channel gets demonetized. Yet when we need them for help, they're nowhere to be found. But I don't want this to discourage you from engaging in the comment section, because if it wasn't for you guys commenting and subscribing, liking and sharing the videos with others, this channel would have been dead long time ago, because the algos are so hostile toward this channel. But every progress we made so far, it was due to the viewership, due to the audience, and how passionate they are in engaging and growing the channel. So thank you so much. Don't be discouraged. Engage in the comment section. Note number two, in the previous video, some of you pointed out that I mixed up downstream and upstream when I was talking about oil. You got it right, but you try to produce an hourly show every single day that takes, by the way, sometimes 4 hours to make, on top of a full-time job, on top of a family, on top of 3 dogs who fart all the time, and you're gonna short some wires here and there. But thank you for noting that. Note number 3, I'm producing videos sometimes twice a day, so you might miss some of the videos, so make sure that you visit the channel and check out the videos. Sometimes they're not going to show you these videos in the main page. For example, I produced a video about transportation. That was a good one, but a lot of you missed it. Another one is the tale of 2 earnings. That was a good one, but a lot of you missed it. Although this video will become really relevant, let's say in the 4th quarter of this year. And today I produced a video about the European economy, so make sure you check that out. And with that out of the way, let's move on to the main topic of this video. And here it is, in focus. Unhinged. Yep, Jerome Powell is a hero. Up is down, night is day. At least according to Jimmy Cramer. But we start with this. No, this chart is not of Burj Khalifa in Dubai. This is the Burj Cocaine, courtesy of the Federal Reserve. The assets purchases by the central bank cabal. They've overdone the stimulation, and now we are at the withdrawal stage. The economy, the stock market, is a junkie hooked up on the Fed's cocaine, and now the Fed is attempting to take that drug away. What do you think will happen to the economy and the stock market? And the Fed is nowhere even close of tackling this insane overdoing of stimulation that produced the biggest inflation crisis since the 1970s, arguably the biggest inflation crisis in this country's history. The Fed funds rate remained pretty much at 0, and the Fed remains out of touch, out of mind, so callous about the problem, and they're relying that the stock market, the bond market will do the tightening for them, and they don't have to do anything at all. Look at financial conditions, for example. They went down. Financial conditions are tightening, aren't they? We don't have to cut the coke. Well, if the Fed doesn't follow up on the path paved by the bond and the stock market, but mostly the bond market, well, guess what? Financial conditions will loosen once again, inflation will move higher once again, and the Fed will have to slam their foot in the brake even harder as they kick the can down the road. So this cute strategy of maybe the market is going to do the job for us and we don't have to do anything at all, bullshit. The Fed must walk the walk. The Treasury holdings, the balance sheet, MBS holdings, they're still at all-time highs. The Fed is not unwinding anything, which means the path for inflation is higher and higher and higher. But if the Fed starts to unwind this disaster that you're looking at right now, well, unwinding all of this will create casualties. These casualties will be the economy, the stock market, the real estate market, and all of us. Because when we look at inflation and the pace of economic growth, 2 important aspects of the economy. Inflation, the pace of economic growth. If you have inflation, yet the economy sustains high growth rate, high pace of economic activities, then inflation is not that big of a problem. You're not at the ugly stage of inflation yet. But when you have an economy with higher inflation and stagnant or worse, declining pace of economic growth and economic activities, then you have a disaster in the economy. And this disaster is called stagflation, the most destructive economic phenomenon. Well, let's look at inflation. sky high, and the data we keep getting is pointing out for higher and higher and higher inflation. For example, there was this bullshit theory about peak inflation, demand destruction. Hold your horses. The Fed doesn't have to be as aggressive as we might anticipate because peak inflation, the demand is already waning down. Bullshit. Today we got US factory orders and they went higher sharply in March, up by 2.2%, double the estimate. What does that mean? The demand is still sky high. This is a coked up economy fueled with fake cash printed out of thin air. So of course the demand is not going to slow down. This inflation was never a supply problem. There is no such thing as a supply push inflation, regardless of what the bullshitters, the propagandists, the so-called economists might think. Because when you have a supply problem, usually that is temporary and the problem is resolved right away. The supply chain, if there is a healthy increase in demand, the supply chain must keep up with the demand because that's where the money is. It doesn't make sense at all for the supply chain not to keep up with the demand. But this was never a supply problem. This was always an insane, out-of-whack demand problem, fueled by the Fed's cocaine. Whether we have the thing or without the thing, there is no supply chain system in the universe, be it here, on Mars, in Uranus. There is no supply chain system that can cope with this insane level of demand. On top of that, we got the jolts today. The jolts. And we have 4.5 million Americans quitting their jobs in March. What does that mean? Well, we have the highest number of job openings in history. Matter of fact, for each unemployed American, we got 2 jobs available right now. So everybody who's unemployed right now, you got at least 2 jobs available right now. Nobody wants to take these jobs. What does that mean? We have a shortage of labor. Wages are going to continue to skyrocket with no stop in sight at all, meaning there is no peak inflation. Inflation will never stop until, number one, it crushes the economy on its own, or the Fed has to do something about it. And by that something, we mean crashing the economy. Either way, it's a bad outcome. Now, if you got inflation moving higher, but you have the pace of economic growth still intact, so far so good. This is not the case that we're seeing right now. Here's the pace of economic growth for you. U.S. manufacturing activity slowest in more than 1.5 years as workers quit. Look at this, the gauge for manufacturing. It is moving down, not up. New orders down. Production down. So the pace of economic activity is slowing down dramatically while we have high inflation. This dynamic gives us stagflation, in which the GDP stagnates or even go negative. And this is exactly what we're seeing right now. The estimates for the US GDP was 3.9%. Now the experts took that down to 2.6%. Before you know it, they're going to take it down to 0. And the same goes for the Eurozone, UK. All of these estimates are moving down dramatically. Matter of fact, the IMF is now revising their estimates for the GDP, and they're revising those estimates down, not up. Let me fix this one for you. Here it is. Much better. There we go. And now even Goldman Sachs is waving the white flag. Recession risk has risen, according to Goldman Sachs, who finally admits that there is a recession risk. But Goldman Sachs says, but the consumer will save us. The strong and powerful consumer. You mean the strong and powerful consumer who's swiping those credit cards up and down, up and down, up and down, who's going to be drowned in debt? The zombie consumer who's buying houses they can't even afford? They're taking mortgages at the top of the market. They're gambling on stocks, cryptos. They're buying cars they cannot afford. They're taking leases and loans. They're signing up for rent they cannot really afford without a job. They're assuming that their job is in the bag. And Jerome Powell and the Fed made it clear. By tightening the monetary policy, we mean higher unemployment. You're gonna lose your job. You morons. But keep swiping those credit cards up and down. And let's see what's gonna happen when interest rates move significantly higher. And you lose your job on top of that. Oh yeah, wait for the other taxpayers to bail your ass out. And even Ferguson, the former vice chair, is now saying the recession is almost inevitable at this point. It's gonna happen. You know what's in the bag? Recession, not your job. And today we have Paul Tudor Jones, PTJ, legendary investor, and I don't know if he's a legend or not. Warren Buffett is legendary. Charlie Munger is legendary. But Paul Tudor Jones is like the Chandler Bing of legendary investors. We can do without him. Anyways, but he says that he cannot think of a worse financial environment for stocks or bonds right now. Uh-oh. And PTJ made headlines when he said this.
What would you be telling Jay Powell right now?
Oh,
I'd be saying look for another job.
Jokingly, of course. Jerome Powell should go home. And of course, this outraged propagandist high on meth, right in the morning, by the way, probably drunk too, Jim Cramer. Jimbo lost his mind, completely unhinged in the morning, defending criminal Jerome Powell. Take a listen.
It would be so easy for me to say, you know what, I got a lot of money. I got a vineyard, doing well. I don't want to lose any cash. No! I'm sick of it.
Yeah.
I'm sick of it. I'm sick, and I love Paul Tudor. I've done a lot of work.
Yes.
But I just think to come on and say that Jay will look for a new job. This darn guy is doing his darn best. He inherited a disease that has killed 1 million people, that has shut down China. He's inherited a war that we're doing nothing other than giving him a couple Javelin missiles. And that's Jay? Jay should go home? Go be with Lissa? Have fun? No. Jay is doing his darn best. And the idea of just coming on and saying he's funny, which is funny. It's hysterically funny.
Sure. He's definitely got a hard needle to thread.
I say, Jimbo, you should be thankful that PTJ said he should go home, because Jay Powell should be in jail right now for what he's done. The crime of the century, the biggest transfer of wealth in human history, the biggest scam in human history, the largest wealth gap in this country's history. We have an oligarchy right now. It is because of Jay Powell. The American dream is dead. The millennials, the Gen Zers, and the likes, they will never be able to achieve the American dream of owning a home. Even the simple endeavor of owning a home is impossible in America right now, because Jerome Powell pushed these homes prices higher and higher and higher by the insane liquidity he unleashed. For what? To save the assets of the wealthy, to prop up stocks and the real estate market. Evictions are skyrocketing because renters cannot afford the insane inflation in rents. Thank you to Jerome Powell. Jerome Powell committed the crime of the century. And because of that, now we're seeing food inflation reaching all-time highs. The most insane inflation in grains and commodities that we've ever seen. And because of that, we will see a starvation crisis, and thousands, if not millions of people could die due to the scarcity of food and the insane pricing that inflation did to food. You're upset that somebody said Jerome Powell should take another job and perhaps go home? I say Jerome Powell should be in jail. He's a mass murderer. Anyhow, before I get riled up even more and perhaps get the channel banned, let's move on to talk about the equities market right now and what we see from, once again, your beloved and dear leader, Jerome Powell, tomorrow. Well, the problem is, this is not a good start for the stock market. We're short in corporate earnings. We got 7.1%. The average is 8.8%. The 5 years average is 15%. So earnings are down. What will support equities valuations to move higher? If earnings is a bust, if the Fed is about to taper the accommodation, what else? What will push stocks higher? Magic? The Holy Spirit? The alignment of Jupiter and Neptune? I don't see any way for stocks to go higher. Sure, we can get a rebound here and there. We might get a rebound tomorrow, an insane rally. But that's not going to even last because corporate earnings are down. The bottom lines are down. There's nothing we can do about it. Growth is stagnating and moving down. And so far, the Dow Jones Industrial Average this year has been outperforming the NASDAQ. Why is this an ominous sign? Here it is. Every time the Dow Jones outperformed the NASDAQ by this margin, or higher, it was during bear markets. Yep, which means we are in a bear market. We're just starting. On top of that, analysts whose sole job is to pump equities at any cost, now they're actually cutting earnings estimates. Not a good sign. But in the meantime, from a trading perspective, we're having, let's say, extreme bearishness right now, at least from a sentiment perspective. And this is what I tweeted yesterday. If Powell doesn't surprise with a 75 basis points and doesn't talk about reducing the balance sheet, stocks will rebound big. Knowing how obsessed Powell is with the stock market, he will likely attempt to please it. Big mistake from a monetary and economic perspective in the long run. So if Powell comes out vanilla saying, hey, here's 50 basis points and I'll keep my mouth shut, it's done. Goodbye. Stocks will go higher, big time. But if Powell steps on landmines, specifically from the reporters, and start talking about a 75 basis points later on, or maybe reducing the balance sheet, we could see equities down. But here's the thing. The stock market is a game of expectations. Had we headed to the Fed's meeting with equities rebounding significantly higher, just like we saw back in the early parts of March, the rebound rally, which we now know was a dead cat bounce, a bear market rally. If the market was heading into the Fed's meeting surging higher, earlier, I would have said the risk is to the downside. Even if Powell just says it's 50 basis points, that would be hawkish enough to crush stocks. But now we're heading into the meeting with the indices down big, with the sentiment crushed, with market participants bruised and scared, with the dollar rallying like crazy, with the 10-year yield moving significantly higher. The risk becomes to the upside, that perhaps Jerome Powell will not be as hawkish as many have anticipated, and this will unleash a relief rally in equities. And I'm not the only one saying that, by the way. Even BlackRock's Reader, whatever the hell he is, came out today and said that the Fed could spark a relief rally. And the relief rally, of course, will be another dead cat bounce, but we'll cross that bridge when we have to. And the last thing I want to talk about is, remember last year when the Wall Street bets and the morons, the meme stock morons, were telling us, buy GameStop and AMC to the moon, the short squeeze, we got the hedgies, we're sticking it to the man. We're the captain of the ship right now. Nothing can beat us. And I told you, you're the captain of the shit. The joke's on you. And of course, I got a lot of hate. You're a boomer. You don't understand. You're a hedgie. You don't understand nothing. GameStop to the moon. AMC to the moon. Well, we know where the moon is. It's south. It's in the toilet, right? Meanwhile, the man that you guys been sticking it to, well, he's the man, dickhead Ken Griffin. He's up 7.5% in April, even though all of you guys are down. It was a massacre in the stock market, but these criminals, they know how to play the game. They're long when they have to. They pump when they're long. And now they're all betting against the stock market because they know the Fed is going to end the party. And of course, the Fed tipped them ahead of time. And now they're all short and they're making a killing. It's not just dickhead Griffin, by the way. It's Einhorn, all of them. Up big in April because they've been shorting. This is their game. This is not our game. Maybe someday it will, but we have to be smart about it. We have to win. And we have to stay in the game for us to turn the tables. And we become the holder of power in the stock market. We cannot rely on the SEC. The SEC is in a coma by design, and it will never wake up. So if you're going to swim with the sharks, you got to be one. You got to at least pretend to be one. This is exactly what I've been doing in this channel. Navigating through the bullshit, through the pumping, through the propaganda, and taking care of you. Don't buy the hype. Follow the macroeconomics rotations. Stick with the good stocks. Avoid the garbage ones. Avoid the overvalued stocks. Matter of fact, short the garbage stocks. The right ones when the time is right. If you're using that strategy, if you're navigating this jungle carefully, you're not going to fall victim. You're smarter than the rest. Folks, we have to stay in the game. We cannot allow them to take our money every single bubble. They pump, they take our money, we lose, and then they short and they keep the money. And they double their assets holdings and their concentration in the stock market, making the rich even richer. We gotta stay in the game. And we're not gonna stay in the game if we're stupid and dumb. Anyways, I'm riled up today. I'm in a good mood. Let's move on to cover the stock market, and we start with the performance of indices today. And here we go. In anticipation of Fed Day, the market remains flattish. Nobody wants to buy, nobody wants to sell. We're all waiting for Powell. So the Dow Jones Industrial Average was pretty much flattish, up 67.29 points, or a gain of 0.20%. The Nasdaq was up by 27.74 points, or a gain of 0.22%. Likewise, the S&P 500 in the green by 20.10 points, or a gain of 0.48%. The sectors' performances were led by number 1, capturing the gold medal, energy; number 2 for the silver, materials; number 3 for the bronze, REITs. And the laggards were led by cyclicals, defensives, and technology. Interesting that yesterday was dump energy, dump real estate, dump materials, and buy technology, buy communication services. And today we're flipping back to energy, materials, and REITs. What's going on here? Anyhow, the advance to decline ratios, NYSE 66% advancing, 30% declining. The Nasdaq 52% advancing versus 42% declining. Commodities, crude down across the board, WTI, Brent all down a little over 1.5%. Gasoline up almost 1%, heating oil down almost 2%, but the party boy lighting up green is natural gas up almost 5% today. And the trajectory for natural gas is higher and higher and higher, unless Jerome Powell kills the party. Softs, we have gains led by coffee, modest gains. Then we have OJ, lumber, cocoa, all closing in the green, be it modestly. Likewise, the declines were led by sugar, a little over 1% to the downside, and then cotton losing a little over half a percentage point. Metals, flattish across the board after an ugly day yesterday. They're waiting and waiting for the Fed. If the Fed kills the dollar, metals will go higher, big time. But for now, gold, silver, flattish. Yet we have some noticeable gains for platinum, a little over 2.5%, palladium gaining almost 1.25%, and then we have copper with gains of a little over half a percentage point. Meats, lean hogs is down almost 2.5%, slaughterhouse. But feeder cattle, the rise in feeder cattle continues to go on, gaining another 1.25% today, while live cattle futures were in the flat line. Lastly, grains, we have gains, big ones, for canola oil, up almost 5%, oats, up a little over 3%, soybean oil, pretty much flat, after a down day of over 5% yesterday. Weird when you consider the fact that we have a shortage in oil, but we have declines here led by soybean meal, corn, soybeans, wheat, rough rice, all closing in the downside. Here are some commodities news for you. We start with natural gas. Natural gas production growth wanes as needs arises, and we're talking about the U.S. natural gas production. We've been talking about Europe and the need of U.S. LNG supplies. Well, now we have production down here in the U.S., and this is yet another tailwind to push Henry Hub gas prices even higher. Now, we have European firms signing LNG deals with suppliers from the United States, and they're looking for companies with green credentials. One of these companies is Cheniere. They agreed to buy some LNG from Cheniere, but here's the problem. The increase in natural gas supplies from this country will happen by 2026. So for now, there is no relief in sight, and this will continue to push natural gas prices even higher. And when European companies ask for green credentials, well, guess what? The production and transportation of natural gas is not that green to begin with. The emissions are the highest in the largest exporter of natural gas, the Sabine Pass in Texas. So good luck with the green credentials thingy. And now we got the news that Qatar is actually surpassing the United States as the top producer of LNG in the world, topping the US and Australia. So our production is going down, Qatar's production is going higher, and they're exporting more. And therefore, we have a boom when we talk about Western economies in demise, be it US or European economies, yet we have a boom in Middle Eastern economies, be it Saudi, be it UAE, be it Qatar. The reason is the massive surge in energy prices. When we talk about diesel, for example, we're seeing a massive squeeze. This is a short squeeze, an epic one, the likes that we've seen in nickel before. And who's going to hold the bag in this one, by the way? Wait till we get the names on who's going to hold the bag for this squeeze. But all in all, New York diesel futures are reaching all-time highs. What does that mean? Peak inflation, you said? Forget about it. When diesel costs move higher, truckers have to pay more. And trucking is the core and the heart, the backbone of this economy. When we talk about transportations, we don't have a decent railway system at all. So we depend on trucking. So if they're going to pay more for diesel, they're going to pass that extra cost. They're going to pass that extra cost all the way down to you and I, the end consumer. We're going to pay more and more and more. And inflation is not going to stop here. The Fed has to act now. And of course, they're not. They're going to do the 50 basis points, and then we'll see, we'll assess. God forbid the stock market goes down. But if diesel costs move higher, everything will move higher. Now, when we talk about lithium, is the insane surge in lithium prices coming to a stall? We'll see. This is at least according to China lithium prices. And if the demand of lithium suddenly stops or starts to go down, what does that say about the health of the automotive sector? Perhaps they're halting production ahead of time because they're seeing demand going down. This is a leading indicator, the prices of lithium. We also saw a recent drop in aluminum prices, but we got a rebound of Chinese comments from Xi Jinping regarding an infrastructure push in China. You lock the economy, you cause this massive stagflation, and then you want to stimulate the economy by an infrastructure package. Wow, genius. How about just reopen the economy? Anyways, we'll talk about China perhaps in tomorrow's video, but let's talk about grains. The White House is seeking $500 million for farmers to grow more wheat and pay for loans. The problem right now with wheat is the following. The Ukraine output is gone. That's for sure. And then we have Russia, the number 3 provider of wheat. Well, we have sanctions now. We can't buy Russian wheat. So you got US, India, and China. US production is already down. China is ramping up. India is ramping up. But here in the US, farmers are having a hard time finding fertilizer. And fertilizer prices are moving significantly higher due to the sanctions against Russia. So they're choosing less intensive fertilizer crops. And this happens to be soybeans. And therefore, we're seeing soybean prices kind of stabilizing. But this will cause massive shortages in fertilizer-intensive crops such as corn and wheat. And wheat is bread. Without bread, we're going to see riots, starvation, hunger. Wheat is the foundation of the food pyramid. Without wheat, we're going to have starvation across the globe. So the U.S., now we got 500 million. Maybe the 33 billion we're spending on Ukraine in ramping up the war, by the way. More weapons, more escalation. Perhaps some of that money could go in restoring our agricultural land that we're losing right now. Food security is the utmost importance in any nation. And unfortunately, we don't have food security here. But the question is, who is going to substitute the wheat exports from Russia? Is it going to be Canada? Well, no way, because Canadian farmers are now having a hard time when you have fields that are either too wet or too dry. What about India? India is now ramping up the supply of wheat, but today we got the news that if the heat wave persists, we could see a loss of 50% of the Indian crop of wheat. Oh boy, this is starting to get really, really scary. When you read about famines in history, it is an awful period for humanity, and it causes riots and uprisings and violence. We're heading that way, unfortunately. And lastly, we have news from the UK. Now the UK food manufacturers can substitute sunflower oil with an alternative vegetable oil because we're not getting sunflower oil from Ukraine, the #1 producer in the world. So now they have the go-ahead to use what? Corn oil? We got a shortage in that too. Palm oil? Well, Indonesia is not exporting right now. What else? Soybean oil, perhaps? Moving on to the options market, the big casino. What's going on here? The volume is down all in all. Not an encouraging sign for the bulls. We got to see some participation here. Equities are not going to move higher without somebody buying calls. But for now, they're buying a lot of puts, which means you got to pay attention now. If Papa Jerome Powell comes out vanilla, saying, hey, it's 50 basis points and goodbye, I got to go to the bathroom, then the stock market will shoot up big time. Why? We're going to see all of this short covering, all of these Johnny-come-latelys buying puts now after the drop already happened. Well, they're going to be forced to cover. We will see a massive rally led by the biggest losers. But for now, we got Apple at #1, the hottest table in the casino, although it was quiet today. But regardless, Apple at #1 with around 800,000 contracts, about 57% of those were calls. Tesla, the souffle, at #2 at around 500,000 contracts, about 59% of those were calls. Notice the put-to-call ratios for the souffle. Up till yesterday, they were buying more puts than calls. Now, they're buying more calls than puts again. Are we about to see a rebound in the souffle? Perhaps. We got 59% calls. #3, AMD at around 500,000 contracts, about 63% of those were calls. Moving on to the unusual activities that took place in the options market today, we start with the ticker INVZ. Innoviz, a trash company, down big from the highs, but today was a rebound day for the name, and somebody's betting for more gains to come by buying the $5 calls for the expiration date June 17th with expectations. The name could move higher by more than 6% by then. They paid around 70 cents a piece to enter this trade, all in all spending around $2 million. What about the ticker KO, Coca-Cola? They're buying puts. Interesting. The 55 puts for the expiration date, July 15, with expectations that Coca-Cola could go down by more than 13% by then. They paid around 60 cents a piece to enter this trade, all in all, spending around $800,000. What about the ticker ARKKKKK for Tesla witch Cathie Wood? They're buying calls. If Jerome Powell delivers, RKK will go higher big time tomorrow. So they're buying calls, the 58 calls for the expiration date, May 20, with expectations that the name could move higher by more than 16% by then. They paid around 85 cents a piece to enter this trade, all in all spending around $600,000. And then we have the trades for the ticker TSLA Tesla. This is a call spread. They're buying the 1,020 calls and they're selling the 1,040 calls, all for the expiration date, June 10th. They're betting that the souffle could move higher by a little over 12%, but not more than 14%. It's a tight range, and they paid around, let's say, $35 a piece for buying the 1,020 calls, and they received around $28 a piece. All in all, the entry cost is down to $7 a piece, so they're risking $7 with the hope of flipping that to $20. Not a bad trade, in my opinion. And all in all, they spent around $3.8 million. Lastly, what about AMC for, you guessed it, AMC? They're buying puts, the 14.5 puts for the expiration date, May 13, with expectations the name could go down by more than 6.5% by then. They paid around 85 cents a piece to enter this trade, all in all spending around $425,000. Moving on to the heat map analysis, Yesterday's heat map was interesting because REITs were down big, utilities were down big, defensives were down big, the big pharma names were down big. We saw a migration to the northern part of this map into cyclicals, into technology, into software, into chips, into communication services. Not anymore, as if the rotation is gone. Of course, we got bad news from Expedia's earnings today, and therefore we're seeing the travel names down big. But so was software, so was technology, and chips were muted. Meanwhile, we saw an upside day in energy, in materials, in fertilizers, in industrials, and banks, as if today's action is betting that yields will move higher after Jerome Powell speaks, and therefore they're buying banks ahead of time. I'm not going to read a lot into it because it could be a trap. You cannot do one move or the other, expecting Jerome Powell will do one thing or the other with certainty. We know he's an imbecile. He can deliver a vanilla speech saying, hey, 50 basis points, and that's it. But when the reporters ask questions, he might fall into a trap and start talking about the balance sheet, perhaps an upcoming 75 basis points hike. That would freak the stock market all around. And of course, JP Morgan says, stick with energy stocks. They're still underappreciated because we're seeing soaring commodity prices. Now, energy is up big year to date. We should not have the tunnel vision of placing all of our bets on energy. When energy becomes overcrowded, overbought, you take profits, you raise cash, and wait for the market's next move. Maybe we will see a rotation into technology again. Maybe Jerome Powell will come out vanilla. He's not going to cause any disruption. The dollar goes down, the 10-year yield goes down in a pullback, and we see a revival, a rebound rally in tech, for example. Well, now we have the cash, and you booked your gains in energy at the top. I'm not saying this is the top. Look at the earnings, for example, from Coterra and Devon, all of these gas producers that we got today. These stocks continue to move higher, so you want to have them in your portfolio, but take profits as these names continue to move significantly higher and raise cash. If the market wants to go to tech, if it wants to go to banks, if it wants to go to defensives, now you got the cash to move accordingly. Some of the notable movers in corporate news, how about Apple? Well, Apple is facing fresh fines from the Dutch regulators because they say the settlement with the dating apps in the racket they call the Apple Store is not enough. It's not sufficient. As you might be aware right now, the iMob from Apple, well, they have a racketeering business we call the App Store, and they intimidate and bully app developers to pay 30% to Apple, otherwise known as the rent. The rent.
For the rent. And
if you don't pay the rent, they crack your kneecaps. They ban you from the store. But thankfully now we have Reverend Elon Musk once again criticizing Apple for the 30% tax. And that's what it really is, a tax. I mean, if I'm an entrepreneur, you gotta have an application. You gotta have an app on the App Store. Well, now you have to pay your expenses. You have to pay taxes for the government. You have to pay state taxes. And on top of that, you have to pay the iMob tax. What do you have left? Nothing. They took it all. What is the point of entrepreneurship in this country if the iMob is going to take 30% cut? Here's another one, Amazon. Yesterday we got the vote in the warehouse, and unfortunately Amazon won. And the unionization effort, well, it's a bust for now. But don't be discouraged, and for the workers at Amazon, don't fall into the propaganda by Amazon, because unfortunately, you're gonna lose your job either way. I promise you. When the Fed tightens, we're gonna see unemployment moving higher. You're gonna lose your job. I promise you. If you lose your job and you trust Amazon, the evil empire, to care for you or give you any unemployment benefits when they kick your ass out, you're sadly mistaken. But if you have the bargaining power of unions, you can secure deals. If you get kicked out of Amazon, at least you can have a roof on the top of your head for a few months. So the workers have to start thinking and not fall into the propaganda by Amazon. Speaking of Amazon, now we have Rivian, the gift that keeps on giving, crushing Amazon, crushing Ford, crushing the mom and pops who invested in Rivian. Rivian is like the herpes of the stock market. It keeps coming back over and over and over again. And then we have news from Netflix. Netflix is dumping her doucheness, Meghan Markle. And here's an FYI for you. Some of us, I'm not going to talk about it a lot because I don't want to get in trouble, but some of us actually took writing classes with her doucheness back when she was a struggling actress in LA. Not a fan back then, not a fan right now. And Netflix is dumping her doucheness. Goodbye. But they're keeping Chappelle, right? Well, here's another one who got dumped. How about the Obamas? Spotify said goodbye to the Obamas. We don't want you anymore. And of course, it was Spotify who dumped the Obamas, not the other way around. But your beloved propaganda media says the Obamas are the one who are dumping Spotify. Obamas to end the exclusive deal with Spotify. Really? It's not the way it happened. Barack and Michelle Obama to end the exclusive podcasting deal with Spotify. Obamas to leave Spotify, seek podcast deal elsewhere. Not the way it happened. They got dumped. But guess who's not getting dumped? Yep, Joe Rogan. His viewership, his listenership continue to grow higher and higher and higher. Spotify decided to keep Rogan and dump the Obamas. In other words, there is no money in wokeness. It's a fake movement that only exists in the coasts and online, not in real life. Moving on to the heat map for the ETFs. Yesterday was a massacre for REITs, for utilities, for consumer staples, and we saw tech and growth moving significantly higher. We thought it was perhaps the beginning of a rotation ahead of the Fed's meeting, but now we're seeing this bipolar market, this multi-personality market moving back into value. Yesterday was growth, now it's value. It's like a teenage girl when she comes to you and she says, I love you, but I'm kind of confused because my ex called me back and I'm now having mixed feelings. I don't know if I should go with cock A or cock B. And you know what you should say when that happens to you? Okay, I'll make it easy for you. My rooster is not available. Good luck and goodbye. And of course, I apologize to the three ladies who watch the program on a regular basis. These are crude jokes. These are locker room kind of jokes and talk, and I apologize. Unfortunately, we have majority male audience. I'm just trying to appeal to these savages. But what was I talking about? Oh yeah, value and growth. Now it's value, yesterday was growth. We'll see what happens next. But we're seeing more action in energy today. XOP, XLE, OIH, all up big. Materials up big. XME, gold, GDX, all moving higher. We're also seeing commodities rebounding. Uranium, oil, gas has been outperforming for a while now, UNG for natural gas. Likewise, it was a rebound day for the EWZ, Brazil, in international, the commodities giant. Yesterday, the EWZ was down big. So again, it is a confusing market. Yesterday went with growth, dumped value altogether, dumped the inflationary names, commodities, and today it's back the same theme. So we have to find consistency here. We cannot jump from one side to the other every single day. We cannot follow one rotation to the other. And the so-called barbell approach, by the way, it's garbage. You're buying the winners and the losers. What is the point? You're even now. Maybe you're going to dip into losses even. Stick with the winners. And so far, year to date, the winners are commodities, value, energy, materials, utilities, defensives. That's what's working year to date. We get these episodes of growth moving higher, but then that fades away. We have to see consistency in growth, and that will not be confirmed without the Fed doing something, without Jerome coming out mild. And then maybe we can have a good month of May for technology, and a rotation happen out of energy back into tech, chips, etc., etc. But we haven't seen solid evidence for that to happen yet. Anyhow, moving on to charts, and we start with SPY 30 minutes chart. What's going on here? We got the rebound, the short covering rebound late Monday. You can call it the plunge protection team rebound. Doesn't matter to me. But if it was a short covering rebound, then there is more where that came from. Meaning, for now, the chart is consolidating at around 416 in a bull flag pattern. As of the chart saying, hey Powell, give us the green light, and this chart can blast higher all the way to 430. But if Powell disappoints, down we go again. And we're going to violate 416, 410.5, and perhaps make lower lows. Here's the daily chart for you for the continuous contract for the SPY. Again, the volume went higher on Monday on buying. This is good news for the bulls. Today, we saw the volume moving down slightly. Another good sign for the bulls that perhaps the selling is reaching a climax. The momentum indicators are curling their way higher. On top of that, the bulls kept 4,102 as support for now. All of these are good signs for the bulls. The problem is you're not going to feel safe and secure until this chart recaptures at least 4,232 as support. But even that's not going to make it. The chart has to go above 4,300 for the bulls to feel okay. We're not in the danger zone yet. We could see the shorts being forced to cover, and that could take us all the way back to 4,472 as a rebound. What the bears are waiting for is Jerome Powell to deliver, because as of late he has been the dip buyer slayer. And if he delivers and we see a violation of the support of 4,102, that will be a shorting signal for the SPY. But you got to have a daily closing for that to be confirmed. Here's the SPX, the cash index, the daily chart. Look at where today topped, 4,200 to the penny. You think that was a coincidence? Of course not. The algos are saying we can go to 4,200, no problem. But I'm not going to go over 4,200 until I get the Fed out of the way, until I get a confirmation from Powell that he's going to get out of the way and May is going to be a good month for equities. No sell in May and go away. Then the algos are going to push the SPX over 4,200. But the bears are waiting for a reversal tomorrow, and that would be violating the support of 4,114.65. If that happens, we have another massive flush down to come. That would be a shorting signal for the bears to double down. And here's a 30-minute chart for the Qs, the NASDAQ. Again, we got the short covering rally Monday that got us above 313, the biggest trap for now, and it got us above 316.5. Today was consolidation day, consolidating in a bull flag pattern, waiting for Powell to say, go ahead, take us all the way to at least 327.66. But if Powell doesn't deliver, oh boy, we're back at 313. We might even lose that. So what do you do with this information? I don't understand, Maverick. What are you saying here? Should I just wait for Powell? What's the point? I want to make money here. Do you have brass balls? If not, you gotta wait for Powell. But if you want to use the risk versus reward, as I've said before, the dollar was surging significantly higher heading into this meeting. So was the 10-year yield, and equities were down big. The risk is higher to the upside, but you can never guarantee what Powell's going to say or do. Here's a daily chart for the continuous contract for the NASDAQ. The good news for the bulls is the following. Number one, we saw an increase in volume yesterday. It was buying volume by the end of the day, meaning short covering. Number two, they kept the support of 12,766 intact. Number three, today we saw the volume moving down slightly, as if we're seeing selling climax. What follows selling climax is short covering. Another point for the bulls, the fact that the momentum indicators appear to be bottoming. And if Powell gives the go-ahead, we could see this chart blasting higher, recapturing 13,599 as support, and perhaps we could see a rally that takes us all the way back above 14,000. However, if Powell doesn't deliver, we see the chart violating 12,766, the bears will double down the shorts, and we will see a massive flush down from this point on. IWM, an hourly chart, what's going on here? The chart went back and forth in yesterday's session in a retest of 188, the most important and critical support, and it got rejected. But we saw the short covering by the end of the day, and today we got a follow-up, and now the IWM is not firmly, but above 188, which is good news. It is consolidating in a bull flag pattern. Now, you might have noticed in the options market that we saw massive, and I'm talking massive, multi-million dollars worth of trades, single individual trades shorting the IWM. These are big shot institutionals, big shot market makers, big shot hedgies shorting the IWM. They will be proven right in the long run because the technicals are broken in the IWM. But if Jerome Powell initiates a rally tomorrow, we could see massive short covering squeeze in the IWM. And that could take us all the way back to 196.5. So the timing is important here. Do you short now? Do you short later? I think the big short on the IWM, the time is not now. The time will come later. And this is perhaps the most important chart to watch. The Dixie, the dollar index, the daily chart. For now, it is consolidating and keeping 103 as support in a bull flag pattern. It appears so for now. The difference between the dollar and the NASDAQ, the SPY, is the fact that the dollar is extended, technically speaking, overextended, I should say. On the other hand, we're not seeing overextension at all. It's quite the contrary in the SPY and the Qs. So, which bull flag will play out? Is it going to be the dollar or the Qs, the SPY? If I had to lay a bet right now, I would say the dollar is going to flush down. SPY Qs will go higher. But that depends on Jerome Powell's conference. If he's vanilla, if he avoids the landmines, and to begin with, there is no surprise, such as a 75 basis points hike, for example, the dollar is going to flush down. Equities will go higher. If there is a 75 basis point increase or any hawkishness regarding an upcoming 75 basis points hike, or even talk about the balance sheet, we will see the bull flag playing out in the dollar, not in the SPY and the Qs. Here's gold. Yesterday was a flush down day for gold, but I'm sticking with gold here. Why? I believe that Jay Powell will hit the US dollar tomorrow. He understands that the rise in the dollar is problematic for corporate America. So is inflation. But can he give a temporary relief for corporate America by crushing the dollar, at least for a month or so? That could be the case. If that is the case, then gold will move higher. What about oil? Brent is a 4-hour chart with going back and forth around the most important support / resistance at around 105.84. You could look at the formation right now as a bull flag pattern, but it is melting down quickly. So the bearish outlook is the following. What if this is a head and shoulder formation? It's not quite the cleanest head and shoulder formation, but these patterns don't mean shit, by the way. Bull flag, head and shoulders, dove, that doesn't mean anything at all. What really matters is the psychology. The psychology in a head and shoulder formation is the following. The chart moves higher, it struggles in a certain resistance level, and then it moves a little down, gathering some energy, and then it blasts higher above the previous resistance, making a higher high. And then it faces resistance and it moves down, back to the same support it came back from. And then if the chart fails to make a higher high from that support, it means that the chart is running out of energy. If it makes a lower low, it means it's running out of energy, hence producing the head and shoulder look. And that takes us to finally violate the support, which is in this case 105.84. We'll see what happens. But here it is, the daily chart for the 10-year yield, higher and higher and higher. No stop in sight, unless Jerome Powell pulls the plug on this one. If he does, it could be a bad day for banks, good day for technology and the Nasdaq, and vice versa. It could also be a good day for the TLT. This is a weekly chart. The bond bugs have been getting slaughtered nonstop since last year. Is Jerome Powell about to deliver a break for these folks before he gets to slaughter them again? Perhaps. And the technicals support that exactly. Meaning, if Jerome Powell gives the green light for the TLT to move higher tomorrow, we could see massive short covering, which could take us all the way back to 125.12. The VIX 4-hour chart, what's going on here? We're seeing negative momentum in the MACD indicator. We're seeing negative divergence on the RSI from a 4-hour perspective. We're seeing the Fed topping again at around 37, and it moved significantly higher, losing the support of 33. You put 2 and 2 together. Is this the beginning of a negative momentum in the VIX, which means the beginning of positive momentum in the SPY? Perhaps. Yet the SPY bears, VIX bulls would argue the following. This pattern is still making higher lows. Until it makes lower lows, then we don't have a confirmation that the VIX is done moving higher here. The VXN 4-hour chart, what's going on here? Look at the MACD indicator. It is moving to the downside, producing red impressions in the histogram, at least one, a baby one. We have yet to get a confirmation. The RSI is in negative divergence, and it appears that we have a double top for now at around 40. You put 2 and 2 together, the risk says VXN down, Nasdaq higher. But you can never guarantee what Jerome Powell is going to say or do. This is the challenge. But the question once again is, do you have brass balls or not? And by the way, sometimes having brass balls in the market is dumb because you jump ahead of the move and you make the wrong decision and you pay dearly for it. So sometimes having the brains and the patience is more rewarding than having balls. Here's Apple, a daily chart. What are we seeing here? We're seeing a recapture of 157 as support. We're seeing the RSI indicator reversing negative divergence. We're seeing the volume moving down, perhaps reaching selling climax. All good signs if Jerome Powell gives the go-ahead for Apple a rally. And it could go higher all the way to the highs of the last red candle. It could go even higher by the end of the week all the way to 172.4. It is possible, long shot, but possible in a short squeeze scenario. Here's Tesla, the souffle. This is an hourly chart. And again, look at where the chart stopped. Exactly at 918, forming a bull flag consolidation. As if Tesla's waiting, Jerome Powell gives the go-ahead, we're going back to 995. The chart is also making higher lows. All good news for Tesla. It just needs the go-ahead by Jerome Powell. Absent of that, we're going back to the trash. Here's BTC, tulips. What's going on here? We're seeing a sloping line of resistance. Is Jerome Powell about to give the go-ahead for BTC to break above the sloping line of resistance? And if that happens, it will take us all the way to at least 42,000. When we zoom in, here's a look from a, what is this, an hourly chart? A 2-hour chart. You can see clearly the sloping line of resistance, and you can see clearly the reactions along the line, over and over and over and over again as resistance. At some point, either it's going to flush down big in a failure, or if Jerome Powell gives the go-ahead, the risk-on signal, you will see BTC breaking above the sloping line. That would be the green light to rally all the way to 42,000. AMC, this is a 30 minutes chart. We have a similar pattern as in BTC. This is a sloping line of resistance. It was support, it is now support. Look at how many reactions we got along the line, both as resistance and support. The chart blasted higher today, and it got all the way to 16.10, resistance number 1. It did not make it, but there is no rejection for now. All what we're seeing, perhaps, is a gathering of energy before we see another pump higher above 16.10. Furthermore, are we seeing a saucer bottoming formation which should take us in a blast higher all the way above 16.10? Perhaps. The risk versus reward says AMC goes higher. Should we buy calls? Come on, it's fun to lose money, right? Moving on to the conclusion of this video, what do we have on the economic calendar? We have the ADP employment report, we have the services PMI, most importantly, the big dog, Jerome Powell, and the FOMC statement. On the earnings calendar, we have Moderna, Yum Brands, CVS Pharmacy, Etsy, and Marriott. Of course, we're going to cover all of these earnings perhaps in tomorrow's video, but until then, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.